me do a straight line, right? It doesn't matter that this is the top for the year, because you're entering at this point and you're selling it at this point, and you have a stop loss here and you have a take profit here. So you can see that there's a very different approach, very different rules depending on which strategy that you want to follow. Okay, and if you mix and match these strategies, then you're going to end up losing money. And Kun, I got a couple tweets here from him because he talks about this a bit. Mixing disciplines and terminology is psyoping you to lose money. You enter positions like a trader, buying the breakout, right, into long-term positions with an investment thesis that doesn't have the stop loss or take profit levels of a trader, so you carry all the downsides of trading. So that's what we talked about when we looked at the daily time frame, right? Let's look at this here. Let's get rid of this shit. So you, as an investor, right, you bought here because the market's pumping and you didn't get a position. When you didn't buy here, so you have to buy here, right? You buy this position here, which is what strategy do people buy there with? Well, it's either a day trader or a momentum trader, right? That's the only two types of people who buy here, because long-term investors can only buy fear and sell greed. Momentum traders and day traders, because they use stop losses, are able to buy when price is high because they cap their downside. The stop loss is here, right? But when you're a long-term investor, you don't use a stop loss. You are opening yourself up to massive potential downside. When price goes up significantly, it has significant downside because a lot of people are in profit, and price tends to trade back to previous prices that it traded at. Okay? So that's a big mistake people make. Let's read it again. They enter positions using the trader framework, so buying a breakout, FOMOing in, buying when things are sounding good, and the entry was trader, but the position was long-term investor, right? And so I've had so many times in crypto where a coin will look like this, right? Hit the top, right? And I will enter a long-term position here, and I'll think, I'm making money because I will be, but the price ends up a month later, 2 months later, coming down, and then it goes down here, and then it bottoms here, and then it goes back up again, right? And I'll be like, what the fuck? What just happened? I bought the breakout. Why did I lose money, right? You're supposed to invest for the long term. I don't get it. Well, the problem is I bought a breakout, which is what you do when you're a momentum trader or a day trader, but I never took profits, which is what the momentum trader is supposed to do. You're supposed to capture a 2x, 3x, whatever it is, or a day trader. You capture 10% and then you sell, right? If you're going to hold a long-term position, the only entry criteria that you're able to follow, that you're allowed to follow, is buy fear, sell greed. If price has broken all-time high and retested, this is not buying fear. This is buying greed. Okay, and so price is going to go, if this, let's have a look at, let's draw it out as if it's the cycle, right? That's fear, greed, fear, greed, fear, right? You can see this is the cycle. Peak greed, peak fear. If I buy here, I'm buying here, right? Same thing as if I was to buy, for example, here, right? So this is the problem with mixing strategies. You buy the breakout thinking you're a long-term investor when you're not. You should be a momentum trader if you're going to enter a position at that point in time, okay? Now, buying fear as a part of your long-term investing strategy mitigates the downside of a position. When you buy when people are afraid, there's only so much lower price can go. Buying breakouts requires a stop loss, as the downside can become exponential if the trend reverses. Now, buying breakouts also requires you to take profit fast, okay? Or not fast, but within a reasonable time frame. Now, let's look at the second tweet. A common pattern of people who invariably lose money in the markets and 100 times so in crypto is not knowing what you are. People buying as an investor but trying to sell and buy every move like a trader. Or, for another example, people entering as a trader but then holding like an investor. So a big thing that people do, right? Let me show you a classic fucking example. Let's use XRP as an example. All right? they buy XRP in 2017 as a trade, right? They try to do like a quick trade. Binance is better. They buy it here in this region as like a momentum trade, right? They're a beginner and they lose money, right? Price is, let's say, here, and they bought here, right? Like around here. Now they're in a loss, but because they don't like realizing a loss, they didn't put a stop loss. They like increase the time frame of their position. Oh, I'm just going to hold this one. Price will eventually come back. I'm not going to sell. I'll be fine. It'll come back, right? And then they become a fucking bag holder. And the reason they lost money was because they changed to a long-term investor without understanding that you can only long-term invest buying during fear. And this was the peak of the bull run. This is buying euphoria. If you want to buy fear, you have to wait till the price goes down here. So if he sold here and said, I would like to enter this again as a long-term investor, he just had to simply wait for the market to enter fear in this rough region, and he would have done a lot better. So that's another failure that people do. Letting your trades that go wrong become investments is a surefire sign of a gambler without a strategy. You have to be clear on what exactly your edge is and stick to it. So let me show you what my edge is. Again, I've gone over this in the course already many times. So my strategy is buy low, sell high as a long-term investor. Okay, that's my strategy. Using this algo, I buy low, so buy here, buy here, buy here. Now you see we haven't had any buy signals. Why is that? The upside hasn't been asymmetric. We've had sell signals, right? But people are going to buy up here. Price is going to drop, potentially, maybe eventually. They're going to lose money, and I'm going to make money because I'm going to get an entry. Maybe it doesn't happen like this, but that's the idea, right? You buy when people are fearful, when the market is shitting itself, and then you sell when it goes up at the end of the bull run. Okay? Pretty simple. So just to summarize, be clear on what your strategy is. Do not mix strategies. Make sure that whatever strategy you follow, you apply the rules of that strategy. As in, if you are a long-term investor, you buy low, sell high exclusively. And if you're a momentum trader, you buy breakouts exclusively. And if you're a day trader, you can basically do anything as long as you use a stop loss and you cut positions quickly and you have an edge. Okay? Thanks guys for watching. I'll see you in the next video. Cheers.